Disclaimer: the insights and opinions shared on this show are for educational and entertainment purposes only. Before making any financial decisions, we recommend consulting with a qualified professional to better understand your unique financial situation. Welcome to the Investors Playbook Show, where our mission is clear: empowerment through financial education. We firmly believe that financial freedom isn't a privilege, it's a right that's available to everybody. Each week, we dive deep into the world of finances, breaking down complex topics and making them accessible and actionable for everyone. As we grow this community, we invite you to join us on this journey. Why tune in? Because together, we're not just learning about wealth, we're building a movement, reshaping futures, and proving that with the right knowledge, financial success is within everyone's reach. It's time to get off the sidelines. Let's go. Welcome back to another episode of Investors Playbook. Of course, you always have your host, Deshaun Edwards and Cornell Rowan. How you feeling today, bro?
I'm feeling great as always, man. It's been a busy weekend, but for good purposes, you know. I had orientation for my doctorate program. You know, very insightful. I found out it's going to take me about 4 years, which was a surprise to me. But hey, we're gonna
Yo,
make it
that's
happen.
easy.
It's crazy.
4 years?
I feel like I'm getting my bachelor's again, bro.
That's what it sounds like. Didn't it
Yeah.
take you 5 years to get your bachelor? No, I'm just playing.
Hold on, bro.
You getting your doctorate faster than you got your bachelor? Oh
Yeah.
man,
Hey,
I'm
but
just
how long did it
messing
take
with
you to
you,
get your
bro.
bachelor's?
It took me 5.5 years as well, bro. But I was
Oh,
getting
okay.
an engineering degree. What was your bachelor's degree in?
Behavior analysis. And
Oh, okay.
the funny thing about that is I feel like it put me on a separate path because behavior analysis, it applies to everything,
Yeah.
everybody. So
For-
when I was getting the degree, I didn't understand how pivotal it was in my life because it allowed me to understand, especially in the field I'm in now, you know, special needs. It allows me to understand why they do the things they do and how to change the environment to elicit better behavior. So yeah, back then it sounded funny when I was getting it, but you know, now it is why I'm in the role I'm in now.
Y'all hear him trying to use big words like illicit, better behavior.
You know,
Come on.
I had to throw a few words at you to make you
Hey,
go, oh, this man
spell illicit, bro. Spell. No, I'm just playing. I'm just
ELI CIT.
ILLLI.
But nah, for real, it's a very good, and I wish more people understood, you know, behavior. But yeah,
No, bro.
that's probably what my dissertation is actually going to be. So it's funny that you mentioned that. So
I think that is awesome. I mean, because we talk about behavior all the time, right? We talk
yes,
even on our podcast when it comes to money, people's behavior and why they do the things they do and why they act the way they act with money, like the wealth mindset, the scarcity mindset. Bro, money. I mean, I think mindset is like the beginning of a breakthrough with anyone who's like in any type of financial situation or if they try to reach financial freedom. It's really about your behavior. So I mean, I joke, but I think that you learning about that is very important because a lot of people take that for granted. They think it's all about, you know, learn and do, but your behavior, that thing in your brain that tells you what to do and not to do, can prevent you or make you do some wild things, right? Prevent you from making good decisions, make you make some not so good decisions. But, bruh, human behavior is a very interesting and unique topic. So, yeah, you getting a doctorate and writing a dissertation on it. I'm excited. The next 4 years of your life are about to be intense, bro. I already know.
hey, yeah, it's definitely gonna take growth, and I pretty much I plan on embracing it, man. But like, how are you, bro?
Bruh, I'm good. I've been doing a lot of traveling. We celebrated. My guy Devon, we was in Toronto, Canada. We did Carabana. We was out there for his bachelor party. He's getting married at the end of the month, so super excited for that. And just this week coming up is about to be, I mean, not this week, this month coming up is about to be filled with travel, bro. We're hitting an AI conference later on today, actually.
Where's the conference?
It's in Las Vegas.
Okay, that's what's
And
up.
then we're going to Blackest Tech. So that's another conference that's happening that's going to be in Texas. And then, of course, we got Invest Fest. You feel me? At the end of the month. Well,
We do have InvestFest
at the weekend before, yeah.
in
So
2 weeks.
that's gonna be in Atlanta in 2 weeks. That's crazy. Yeah. So again, we've said it on like the last maybe 5 or 6 episodes. Link with us at InvestFest. We will be there. We will have a booth. Um, we want to increase financial literacy. We want to test your financial knowledge, and of course, we want to give away some swag. So come holler at us at the booth at InvestFest. Um, we should find the booth number and like put that in the next episode, Cornell, so people
I want
can.
to say it was like 244, but I'll double check.
All right, cool, cool. Yeah, double check. So yeah, we'll be at InvestFest at the end of this. Well, in like 2 weeks, gonna be in Atlanta, Georgia. So come mess with us. What else we got for them before we dig into this episode, this educational episode?
Join the Facebook group. Join the Facebook group. Join the Facebook group, man. Having great conversation there, trying to have self-thriving community. And yeah,
Absolutely.
we just want people to learn from each other.
That's really all it's about, man.
Yeah.
Each one teach one, lift as we climb, all that stuff, man. We want people to basically grow together. All right. I mean, we are all about community, and of course, education just goes further when you have a group of people that are also learning with you. So, yeah, like Cornell said, join the Facebook group, man. But yeah, so today's episode, we are going to take a different approach. We want to dive more into that educational piece that we just mentioned. So rather than come at you with a what's recently happening in the news, we want to more so help people in this episode understand what it means when you're actually looking at a stock, right? We talk about all these stocks that have right now if you're looking at the news, you'll see stocks are going or stocks that recently took a tumble, stocks that went down. People say, okay, now's a good time to buy. But are you actually looking and researching and understanding why, like the numbers behind it all, like the PE ratio, the market cap, what makes a stock worth what it's worth? Talking about volume, what that even means. So in today's episode, we are going to literally break down a stock, go through each item, well, almost each item, in a stocks detail quote. We're going to talk about the opening price, closing price, 52-week high, 52-week low, so forth and so on. So it's going to be very educational heavy. I hope that you all enjoy it. And of course, just use this to learn and better understand what a good stock looks like and what makes a good stock a good pick and what makes a not so good stock a not so good pick. So I'm actually going to share my screen. So if you are listening on Spotify, if you're listening to the podcast, we are going to be very detailed in our description. So you could switch and find us on YouTube, same Investors Playbook LLC on YouTube and watch the video, or you can listen in and just, tune in and follow along as best as you can. But we actually do have the screen recording up, and it's going to show fidelity as we go through and step through the stock NVIDIA and talk about each of the different aspects of NVIDIA and what makes the numbers the numbers. So, you ready, Cornell?
Yeah, let's get it.
Share my screen. Let me know when it's up.
Yep, there we go.
All right, cool. So let's dig right into it. Again, this is Fidelity. So this is the brokerage account that me and Cornell both use. We are not sponsored by Fidelity. That would be dope, but we are currently not sponsored by Fidelity. We just think that it is a very user-friendly application. It is able to house not just our brokerage accounts, but also our retirement accounts and any other investment accounts that Fidelity has to offer. You can have them all housed in one place. They have a very good customer service and a very good search tool. But that's for another day. For today, what we're going to do is talk about NVIDIA, and in more detail, we're going to talk about all of these items here. Right? So the detailed quote, we'll dig into the volume. We're going to talk about 52-week ranges, things like that. So to get started, let's just look here. NVIDIA, this is the name of the company. anytime you search for a company, you're gonna type right here. NVDA is the ticker, what they call it, which identifies NVIDIA. The very first number you see is going to be the current price. So Friday's close, NVIDIA ended at $104.75. This does not include what happened after market. This is just what happened at 4 p.m. Eastern Standard Time. And this is the total amount of money and then percentage on the day, which is Friday. So on Friday, NVIDIA lost 22 cents on their share price or went down 0.21%. All right, Cornell, so now over here, let's dig into the 52-week range and why that's important.
All right, so for Nvidia, the 52-week high was $140.76. As you can see, this is significantly higher than what Nvidia is today. The 52-week low is $39.23. So when it comes to these, I always like to look at the 52-week high because if the current price is hovering somewhere near it, I tend not to buy it because it's at some point it's due for a pullback. So I like to wait until it's probably around like 10 to 15% off because at that point I'm thinking, okay, this stock is on sale. Let me start loading it up, especially if it's something that I believe in, like Nvidia. Right now, Nvidia is kind of leading the charge in chips, in semiconductor chips, which is powering AI. Right now, AI is a huge thing. It is basically people being very innovative in this time and is pushing technology forward. So I'm sorry.
No, I was just agreeing with you, bro. Go ahead.
Yeah, so also 52-week low is important because you want to see where this stock came from. So yeah, it's far from 52-week high, but it's also far from the 52-week low. Because 39, if you look, $39 is extremely low compared to the $104 current price that we're at. It's almost three times it. So normally you would have to be very weary of this because if a stock has gained that much in such a short period of time, in 1 year, probably due for a pullback. And we did see that pullback. I'm unable to tell you if there's going to be even more of a pullback, but that's up to the investor to do their research and figure out if they feel like it is an investment worth investing in.
Yeah. Yeah, these numbers are extremely important. They tell you, like Cornell said, how fast the stock is actually moving. This can kind of help you with volatility. If you're seeing a jump from $40, roughly $39, all the way up to $140, and I want to say, well, this we'll just use these numbers because Nvidia did do a split somewhere in between here, but we'll use the numbers that they currently have from $40 all the way up to 140 within a year. That's extremely volatile for any stock. So that, like Cornell was mentioning, is one thing to pay attention to when you're looking at these different individual stocks is how big of a gap is the 52-week range, right? We're seeing that because there's basically $100 difference between the low and the high with this stock, which means that there has just been a lot of volatility with Nvidia specifically, but we've seen it. That's why we constantly see it in the news. That's why we're constantly seeing tech stocks in the news, and with Nvidia leading the charge, this is expected. So the next number that we want to talk about is the volume. The volume pretty much determines, well, the volume tells you the basically the amount of buying and selling that happened on a particular day. So on Friday, investors bought and sold or exchanged almost 300 million shares. It's 844,157 shares. All this happened on Friday, right? This is how many shares were exchanged, not bought, not sold, but combined, right? That is what the volume will tell you. And a good way to see volume on a timeline that's not just a single day is these numbers down here. These bars talk about volume. So you can dig into the individual day. Right now, we're spanning 6 months. But if you were to do a single day and zoom in, you'll see all the volume candles right here. Of course, the screen is kind of small, but if you go to Fidelity, search for NVIDIA, you'll be able to zoom in and see all the different volume candles. So volume pretty much defines volatility. If you're having a particular stock with a volume that's almost 300 million, you can probably bet that that stock is more of a volatile stock than something that says, a volume that people are trading with the volume of maybe like 1 million. A lot of people are buying and selling Nvidia. This all happened on Friday. This is one day's worth of volume. Well, one day's worth of trading. So this number will tell you about a stock's volatility. And we've seen that compared to the 52-week high. Within a year, the stock had a 100% gap. This volume equals what we're seeing on the 52-week high. Nvidia is a more volatile stock. All right, so now we're going to go down. This we already know. Opening is pretty simple. On Friday, the stock opened up at $105.64. And it closed at $104.75 as of August 9th,
Yes.
which was Friday. So,
And also,
mhm,
Nvidia has a dividend. It's not a big one, but it is a dividend stock.
yeah.
Nvidia's dividend is equal to 0.038% of the stock price, which is roughly 1 cent every quarter.
Yeah.
So I know a lot of people that um, they basically invest for dividend. But
Mhm.
what you have to compare is that dividend worth having rather than investing for growth. So what I'll see is people will invest in things like Ford, right? Because it has a high dividend. But when you look at the growth, Ford's growth is pretty mediocre. So would you sacrifice 60% returns like from things like Nvidia? I know that year to date Nvidia is probably like 100%, right? Am
Yeah.
I? Yeah, year to date
Oh, you mean
Nvidia.
here today? Let me see.
I got it. Year to
Uh,
date Nvidia is up 111%, right?
that's
So
eight.
for
That's right. Yeah, that's crazy.
Ford's dividend is probably what, around 6%, 7%.
Something like that. It's not 100%, bro.
Right, it's not 100%. So we have to weigh. Yeah, dividends are cash flow, and it's awarded to you. But would you sacrifice the higher gains on the growth stocks like Microsoft, Apple, Nvidia, Amazon? Would you sacrifice the growth on these in order to receive these high dividends? And that's
All
what we
right.
have to ask ourselves.
Okay, so sidebar. I have thus far gotten rid of my Ford. Okay, bro. It's been like 2 years, and yeah, I've gotten rid of my Ford. Um, and speaking on dividends and growth stocks, what a lot of growth stock companies are doing is actually adding dividends. Like recently, Facebook added a dividend, right?
It did.
So when you start to see that, that's when it's like, why invest in just dividend companies when you can invest in growth stocks that also give you dividends? The dividends might not be as good, but like Cornell mentioned, the amount of growth that happens, the percentage that you'll gain just from the stock itself going up, one already outweighs a typical dividend, even a stock with a high dividend. There is no dividend that gives you 100%. And Nvidia has done that just already this year. So that's one. Um, and then now again, you have companies like Facebook who are adding dividends, making their stock even more like worthy, right? So you have a stock that's not just a growth stock now, but it's a growth stock that actually pays its investors in dividends. So another thing that you want to look for is these two numbers here. So the current dividend Um, and the well, I forget what EX means, but this is basically the date that the dividend gets dished out, right? June 11th, and then every quarter. And stocks have different dividend cadences. Some are every month, some are every 3 months, some are every year. It just depends. So this is the number that you want to pay attention to, how much you're going to get on the dividend, and then the date that the dividend is going to come out. But yeah, I think dividends are important, but you're right. Growth is you'll get a lot more bang for your buck if you focus on growth, and even more bang for your buck if you focus on growth that also has dividends.
Yeah, because I know for me, all I do is reinvest my dividends. Like if someone is, say, maybe retired and they're living off of dividends, okay, I can understand that
Right.
because they're not so much in the risk, in it for the risk. They're
They're
more so
making
in
the regular income. So yeah, that's different.
right. They're making regular income to sustain whatever living they have. So,
Hmm.
everybody's in their own situation and you kind of have to take it for where you're at.
Exactly.
And I
Exactly.
think that's the most important part. So we never listen to information and take whatever someone says. You have to look at your own situation and see what's conducive for your lifestyle.
Facts. Very true. Very true. Everyone's situation is different. Um, all right. So before we get too far down, we definitely want to tap on this number, the PE ratio. All right, Cornell. So this is a number that can definitely help you determine the health of a stock. It can help you determine the value of a company. But what exactly is the PE ratio? How do we find it? What is a good PE ratio? What is a bad PE ratio? What are investors actually looking for when they're talking about PE ratio?
All right. So when it comes to PE ratio, what they say is a good ratio is around 20 to 25. NVIDIA's PE ratio is 61.43. And what this tells is that there is a lot of investor confidence.
Hmm.
All right. So this is why the stock price is high. And people looking at it from a market analysis standpoint would say that it's overbought. But a lot of these companies that are high in market cap, like these $3 trillion companies, their PE ratios are going to be high because of the fact that they have things coming out. They're all in AI. They all have innovative things that we're looking forward to in the future. So with that, and them pretty much being monopolies almost, investors have a lot of confidence. This is why the stock price is so high. This is why people continue to buy these stocks. Is going to have an inflated PE ratio. What are your thoughts on that?
I agree. I think that you talking about the overbought or the overvalued piece is important too, because a lot of times when you look at these stocks that have a super high PE ratio, it basically means you're buying the stock for a lot higher than, or you're basically buying an inflated price for the stock, right? The stock price is so high because basically the PE ratio itself is the price to earnings, right? Like the actual current price of the stock um, divided by the amount of shares, and that is pretty much a way to determine that number. But if the number itself, 104, is higher than the amount of shares that exist, that PE ratio is going to be, like you said, a bit inflated. So I think that understanding what that higher number means, that 61.43, and doing your own due diligence and saying, is this company actually producing a lot? Does it have a lot in the pipeline? Or is it just a lot of buyer confidence and will this explode in my face down the line? Right? Because for a while you had Tesla. who had a very high PE ratio, and it just didn't make sense. Like the numbers didn't make sense. Basically, the buyer confidence in Tesla was so high, the PE ratio was so inflated, and then eventually, what happened was Tesla not necessarily broke, but it definitely got corrected over time. The buyer confidence started to deflate, and that price started to come down. But that's something that you can only see if you're looking at not just the price of Tesla, but also the PE ratio, better understanding why Tesla's price is where it's at and how that actually affects its PE ratio. How many shares do they actually have outstanding? How much money do they have in the bank? What is their actual market cap? All those numbers help you determine whether or not the price of a stock, what you're purchasing it for, like the whatever the bid size, the act size is, whatever you're buying it for makes sense. If the PE ratio is like in the 70s and the 80s, I feel like that is something that is like at its last end, right before it starts to just do that reverse. So yeah, I think that a nice PE ratio will be between 2025. That shows that the company is close to being undervalued. It shows that a company has a lot of growth potential. Anything lower than that could could be positive, but it also could just be that the company's stock is not growing. The price has not been moving enough over a significant amount of time. So the PE ratio has been low and remained low for a time. Um, so yeah, I think a good average would be like between that 2025, like you mentioned. That could tell you like a healthy stock that is on the verge of growing and hasn't reached its peak. So that is when you want to kind of look into getting into some of these companies. But
For
yeah.
sure.
Hmm.
And with that, these are the main things. And of course, I will look at the balance sheet also. But a lot of these numbers are based off of the balance sheet. Like when you're talking about PE ratio, you're talking about the earnings. But you also want to know how profitable the company is. Like you want to know is debt to income, like it's net income. You want to know pretty much everything that's going on with the company. So yeah, look up the balance sheet, and with that, you'll pretty much know everything that you need to know with the stock. So there are other factors that that can impact the stock, right? So we have news. So let's say that the president just says, "Hey, we're going to try and ban Nvidia forever, and it can never produce more chips." Something like that, something as extreme as that, will probably have a negative effect on the stock price. So no matter how well the stock is currently doing, something might blindside you out of nowhere and impact it. Or it could be something positive, like, hey, we're gonna give this grant of 500 billion to Nvidia because they're moving technology forward, and we feel like they're going to be pioneers to the future. This would probably impact the stock in a very positive way. So the thing is, just with anything that comes, you just got to find a way to thrive in every situation. But be mindful that all news isn't good news, okay? All news isn't valid news. You have to take things with a grain of salt. Like somebody might be like, "Hey, the world is ending and the stock market crashes." This is the time, if you believe in your investment, to buy more because right now it's on sale. So I'm going to purchase more so that when it comes back up, when everybody realizes that the world isn't ending and everybody starts buying their stock again, I'm already in there. I've accumulated more shares at a low price, and now I'm reaping the benefits because I stayed 10 toes down.
There you go. Yeah, definitely doing your due diligence is important because there's a lot of news that's going to happen almost every day. And even if it's not about a particular stock, it could just be about, like you said, the world, the economy, um, fears of this, possibilities of, you know, anything. And it doesn't even have to specifically have the word NVIDIA in it, but it can affect the NVIDIA stock. So news is definitely something you want to pay attention to. Before we leave Before we leave the quote area, just wanted to hit market cap, what that means. Um, like a mega cap of $2.58 trillion. So a lot of people think that the stock price itself is what the stock is worth. This is the actual worth of the company, right? The $2.58 trillion. That's the market cap. That is the value of Nvidia, not $104.75. That's the value of the Nvidia share. And shares outstanding, 24 trillion 600 million. Am I saying that right? Yeah, 24 trillion 600 million. Or no, 24 billion 600 million shares outstanding. This is the number of shares that Nvidia has out. Like this is the number of shares that are owned. Whether you're an investor, whether you're on like the board, whether what if you this is the number of shares that Nvidia has outstanding, meaning the amount of shares that it's distributed to investors. That's what the shares outstanding is. Index is the index that it's currently listed on. So the Nasdaq, the S&P 500. Primary exchange is going to be the Nasdaq. As we know, Nasdaq is heavy in tech. So Nvidia, of course, is going to be in the Nasdaq exchange. Um, we talked about news. Oh, also events. So events are important. When you're talking about events, you're thinking like when the dividends are going to come out. We mentioned that earlier. When earnings are going to be announced, right? It says unconfirmed, but it looks like Nvidia earnings are August 28th. That's coming up. Things like this also affect the stock price. It creates volatility. When a company when a company delivers its earnings, it helps investors understand whether or not the company has been healthy over the last quarter, and it also talks about the future of the company. Maybe not like the far future, but far enough for investors to say, okay, this company had a good quarter, and for the next quarter, this is what they're planning, this is what their expectations are. Let's either get rid of our shares of this company or buy more shares of this company. So paying attention to what the earnings report is every quarter is important for investors because it kind of helps them understand the health of a company. All of this is to determine the health of a company and to help you as an investor understand or better understand whether or not this is a company that you want to invest in. So all of those things. I mean, like Cornell said, there's so much more on this. Like you have the balance sheet, you have all the different price performances. Bro, over the past 10 years, Nvidia has increased by $22,000, 22,000%. That's crazy. So yeah, that was just a, a quick educational how to kind of read a Fidelity specifically um, stock. I think a lot of these numbers are going to be the same if you're using anything else like Charles Schwab or um, any other brokerage account. I don't think the names of this is going to be much different. The actual visual might look different, but for the most part, yeah, that is the important parts of a stock, kind of to help you understand the health of a stock. Cornell, what do you think? We tagged everything that we needed to hit.
I think we pretty much hit everything. I feel like this was a very enlightening
Hmm.
episode, and hopefully it elicits better buying
Oh, here you
behavior
go with
in the
this, man.
stock market. You feel me? You feel me? Man, yeah.
Yeah, I definitely feel you on that one, though, man. All right, I'm gonna stop sharing. Cool. Well, yeah, I hope that, like Cornell said, this elicits a lot of you all to. Did I use it right, bro?
You did.
Elicits a
You
lot of
did.
you all to become more interested and intrigued in the stocks that you are purchasing.
You're
Um,
right, because there's so many intricacies of like the stock market, right? So we're just trying to, help you all out
right.
with all of
Like
these.
we don't want our account to stay longitudinal. We want it to grow. Okay, we don't want it to just go. We want it to definitely increase. We want to see some of that latitudinal movement. You know what I'm saying? Nah, let's quit messing around. But yeah, seriously, this was a this particular episode was to basically educate. We want to help people understand exactly what they're looking at, not just put money in the stock market or listen to advice and just say, I'm going to buy this stock because someone else told me to do it. We want you to understand why, right? So hopefully this episode was very helpful, educational, beneficial. Um, yeah. And I think with that, we're
Yeah.
good.
Join the Facebook. Join the
Join the
Facebook.
Facebook. Catch us at Invest Fest in 2 weeks. We will see you all there. Until then, peace out.
Peace.